What's up, everybody? Austin Weiss here, kicking off the inaugural Austin Weiss Home Advisors interview series. Today, I'm going to be interviewing Maryann O'Brien. She's my preferred lender with Keller Mortgage, and I'm going to be covering everything there is to know about mortgages, the state of mortgage and interest rates in the current market right now, and also everything there is to know about Keller Mortgage, which is exclusive to when you work with a Keller Williams agent. So without any further delay, let's hop into this interview. Hey everybody, welcome back to my channel. This is Austin Weiss. I'm a local real estate agent right here in the Chicagoland area. I'm here today with Maryann O'Brien. She's my preferred lender over at Keller Mortgage. What's going on, Maryann? How are you today?
Hey Austin, I'm good. How are you?
I'm doing fantastic. Just keeping busy. Summer's keeping me busy with all the different transactions going on. I'm sure you're swamped with refinances and all the crazy low interest rates.
Yeah, I mean, purchases too, though. We're busy with both. And interest rates are historic lows, so burning the candle at both ends, but it's a good thing.
Yeah, it's keeping us busy. Okay, so basically what I want to do today is just kind of share with you how I utilize Maryann's services. If you're ever thinking about making a move here to the Chicagoland area, she's my preferred lender. So you'll be talking directly with her and just kind of want to give you some background knowledge on how to apply for a mortgage, what is a mortgage, and then all the different types of loan programs and things that you would need to know in order to buy a house and qualify. So let's start off with, how does a mortgage work, and just give us kind of the basics, Maryann.
Sure. So essentially what a mortgage does is it bridges the gap between a sales price of a property and the amount of money that you have. So there's very limited people that actually have the cash to buy a home outright. And the mortgage is a way to get that home without having that money. So it is a loan, and it's a lien against your property that you would make monthly payments around for the term of that loan until such time it's paid off, and then the deed is released to you for full ownership.
Awesome. Okay. And explain more in detail the types of loans, maybe the difference between a 15 and a 30-year and the advantages and disadvantages.
So Keller Mortgage and the industry as a whole has a number of different types of mortgages and different terms. So fixed rates versus adjustables, 15-year, 20-year loans, and that's the payback period. So okay. On a 15-year loan, you would be paying back in 15 years. Your monthly payment would be 180 equal payments. On a 30-year loan, same thing, but it would be broken into 360 payments. The payments, of course, are lower on a 30-year. You're paying it off in twice the time. The interest rate is often lower on the 15-year because of the fact that it's less risk for a lender to have it out in that amount of time.
Right. Okay. So that makes sense from a financial aspect. Now, I usually tell people from my end, take the 30-year loan, and then you can always pay it down like a 15. Is that good advice?
Absolutely. Right now, the difference in rate between the 15 and 30 has narrowed considerably from historical times. So the savings for a 15-year would really be if you were paying the interest for only 15 years. So if you did that with a 30-year and just paid the additional funds when you had them, you could essentially accomplish that same goal. Gotcha.
Okay. So what you're saying is if you pay down your loan quicker or a higher amount per month, you can shave off years off your mortgage?
Yeah, absolutely. And okay. You can do it in numerous ways. You can do it in a few $100s onto your payment every month. You can, if you're a person that receives bonuses quarterly or annually, you can just apply that as a lump sum. Those type things. The majority of mortgages right now do not have a payment penalty, so paying those off at any time, whether it be early or all at once, if you're lucky enough to win the lotto, right. You could do that.
Okay, well, good to know. I think that's definitely something that's very important for people to understand. Okay, how does one go about qualifying for a loan, and what information needs to be presented to you in order to qualify them?
There's a lot of different things to consider when being qualified for a loan. Some of the items that are the most important would be your credit, your income, your job stability, and the funds that you're putting down on deposit for what we call earnest money. And so all of those are reviewed by what we call an underwriter. That's the person that analyzes your information. So those are the things that you've got to prepare for when you're looking at making application for a mortgage, making sure that all of your ducks are in a row from on that. And, a loan officer like me would guide a borrower through how much they could afford based on the math that is around the income and the assets and the credit, and kind of let them know, here's the maximum that we see you might be approved for. Here are the stumbling blocks you might need to overcome in order to move forward. And then just really put the piece together that allows us a clean approval and process.
Gotcha. Okay. So just to clarify, the more down payment money someone puts down, the lower the monthly payment on the mortgage will be.
Correct.
Okay.
And then there is a threshold there from the percentage of down payment, because if someone is putting 20% down, and we might get into that as we continue our conversation, then they avoid what's called private mortgage insurance. And that's a piece of your mortgage that you would pay monthly that ensures the lender that you're going to make good on your payments.
Okay. Well, then since you brought it up, talk to us about what private mortgage insurance is and how you go about avoiding it.
Okay, so obviously there are programs that allow for as little as 0 or 3% down. But if you are putting less than 20% down on a property, then you'll be subject to what's called private mortgage insurance. And private mortgage insurance is a policy that protects the lender in the event that you default on your loan. So you pay for it as the consumer. It's a piece of your mortgage principal, interest, tax, insurance, and PMI as a monthly, until such time that you reach a 22% equity position in your home. And then
Gotcha.
you have many different ways that can go off, just by natural payment amortization, or by your appreciation of your property, or by a combination of the two, a lump sum. Or if you feel like you're at that point, you can always petition the review of that, and at that point it would fall off.
Okay, very good. And then what's the best way, in your opinion or recommendation, to save for a down payment?
To afford a down payment?
Or just save for one?
A budget, really. Thinking about a long-term plan, how much disposable income you may have in your household monthly, and then just setting aside a certain amount until you reach that goal. We do, as I mentioned, have as little as 3% on a regular conventional loan, 3.5% down payment on FHA, or if you are a veteran of the armed forces, we do have 0 down payment options. But for just a normal folk that is trying to save, it does have to be actual savings or gift funds in certain circumstances. It cannot be borrowed funds. It's got to be money that someone has saved and
Gotcha.
contributed in. And that's from a risk perspective, right? You've got to have skin in the game.
Okay. Can you explain what the monthly mortgage payment includes, such as tax and anything else?
Sure. So we call it PITI. And what that consists of is your principal and interest, which is the mortgage portion. You're paying back a portion of the balance, which is principal, and you're paying interest, which is tied to your interest rate and what we charge for lending you that money. In addition to that, you're going to be paying your 1/12 of your annual real estate tax bill, and you'll be paying 1/12 of your homeowner's insurance.
Okay.
Of course, if you're putting less than 20% down, then you're going to pay the PMI as well. And that's really all that you're going to be paying to the lender. You may also be buying where there's a homeowners association. That won't be paid to us, but we do consider that when we qualify you.
Okay. Well, I'm glad you said that last part, because I know here in Chicago, lots of different townhouses and condos with homeowners associations. So
yeah.
Yep. All right. So how does someone buy a house if they're coming to Illinois from out of state or even from out of country?
Obviously getting involved with a local real estate agent in advance and expressing what their wants and needs are, so that the real estate agent, such as you, can start searching for them. And then again, planning, right? So if someone's relocating as far as a job is concerned, making sure that their timing is how it needs to be, especially if they need to sell a home first. They've got to be really organized about their plan, because most of the time, a buyer that owns a home is going to have to sell where they live before they buy where they're going. And that all of that has to be considered when they're migrating to the new area. We do at times have folks that timing won't align. And we've worked on people like that, right? So we're looking at that point, making sure that the borrower has the funds that they need without the proceeds from their sale. And then also for a certain period of time can afford both mortgage payments. And so that has to be reviewed by that underwriter to make sure that they're in good shape on both of those pieces. As far as the out of the country, that's a little bit more challenging because there are programs for non-U.S. citizens, foreign nationals, depending on the legal status of the person that is coming from out of the country. You've got to find the right program and the right lender for them because there are some products out there. At this point, unfortunately, Keller Mortgage does not have a foreign national program, but they are out there. And so, we work together and make sure that they've got a solution for their needs. And if it's something that I can't do, Austin, you always know I raise my hand and you've got other people that maybe you've got some ideas around. Yeah.
Do you think Keller Mortgage in the future would be able to work with foreign nationals?
I have no idea. We've got many, many different investors and they're always changing their programs. It's just really about where we can find that right fit.
Sure.
So the jury's out, but I never say never.
Right. Well, hopefully someday in the near future, we will be able to, because I get quite a few people that reach out to me from Canada and Mexico, and I'm sure different countries in the future will definitely reach out as well. So I would hope to connect them with you. Do you think, in your opinion, and I get this question a lot because obviously I'm a younger guy, early 30s, and I have people in their late 20s, 30s, and early 40s ask me all the time, is it a good idea to rent out my primary residence? Do you have an opinion about that?
So renting it out meaning that they are then going to move somewhere else and buy another property?
Correct.
If they, again, it's another thing about planning and organization, right?
Yeah. Because
you've got to, it sounds great. It sounds to be able to build a dynasty and start investing young is a really aggressive goal. And for that special person, it can work. But folks have to be mindful of what they're getting themselves into. Have they ever been a landlord? The risks involved with maintaining a property when when you don't live there, someone else does.
Sure.
And then what happens if that person doesn't pay their rent? What happens if they are absentee to the point where geographically they're far away? Are they going to be able to have a management company come and make, whether it be a repair or those type things? So I would say, yeah, why not? But know what you're getting yourself into.
Absolutely.
And, as we know, in real estate is a great investment. And so if someone has the wherewithal to withstand that and does it at a young age, the sky's the limit because they can continue on. And we all know that there's been an immense appreciation. And so, that's good news for our industry.
Yeah. Okay. Thanks for sharing with that. How do you buy a house and sell one at the same time? I know we talked about this maybe a couple minutes ago, but if you could just expand on that a little bit.
So if you need the money from the house you're selling for the house you're buying, then you need to make sure that the time alignment is going to sync up. And you're going to need to work with the listing agent, the buyer agent on both sides to make sure that what you're selling is going to be closing before what you're buying. And then it's really just a matter of supplying the documentation to your lender, showing that you're going to be selling, here's the sales price, here's what I'm netting, and then ensuring that whomever is handling the closing for your sale understands where to put the money for your purchase. And, that's an attorney in Illinois, right? So you've just got to make sure that everyone's communicating properly and talking to one another so that that piece of it becomes seamless. And it happens all the time. So it's really all about the communication and making sure that you know what you're going to net from your property and that plan is enough to bridge that gap when you're understanding how much you need for a new loan.
All right, very good. Okay, well, thanks for explaining that because I that's probably one of the top three questions I get. How do we sell our house and purchase one at the same time? So,
Yeah, I mean, the good news as far as technology is that no one has to like run around town anymore with a check in hand from one closing to
uh,
the other.
yeah. Okay. Well, we've covered pretty much the basics on mortgages, and you did a fantastic job explaining that. And if anybody ever has any questions, you're welcome to reach out to me, and I can put you in contact with Maryann. But let's dive more specifically about Keller Mortgage and their zero loan program, because that's specifically what the company you're working for right now. So let's ask. I just want to ask what types of loans does Keller Mortgage offer at this time?
So Keller Mortgage offers residential mortgages only, 1 to 4 family properties, condos. We do that for primary residence, second homes, and investment properties. Conventional loans, which is just a traditional mortgage. We also do government loans. So what those are your FHA products, your VA product, your USDA products. So those are, and we also do jumbo as well.
Okay.
So in addition to that, on those products, we do those as purchase or refinance.
Can you explain what a jumbo is?
Yeah, a jumbo mortgage is over the conventional loan limit. And so what that means is the typical agencies like Fannie Mae and Freddie Mac will only buy up to a certain loan amount. That loan amount is $510,400. So
Okay.
above and beyond that is considered jumbo. We do have investors for that. They have their own guidelines as far as down payment, interest rates, and what they will accept from a product standpoint, a credit standpoint, et cetera.
Okay. So basically, if you're buying a McMansion,
Right.
that's what you need a jumbo loan for. All
Exactly. Yeah.
right. Okay. How does one go about understanding what type of mortgage is best for them?
They contact their loan officer. So, really understanding someone's needs is my job.
Okay.
I always start a conversation with, tell me your story, tell me your goals and your timing, and see how best I can help you. There are people that are just putting their toes in the pond and want to understand the math before they do anything. There are folks that jump in head first and they come to me and they're like, oh my goodness, I signed a contract, I need the mortgage. And I said, do you know you can afford the mortgage? So yeah, I mean, they need to speak with the loan officer and get qualified for the mortgage to ensure that they're going to be able to be approved and get that money
Right.
before they sign the contract. Because signing a contract with you means they're obligated to buy that property. Now, there's contingencies that you can add to protect them, but essentially, I mean, that's a legal document and a legal promise to perform. And so they've got to make sure they can.
Okay. Exactly what Maryann just said. For everybody watching, that's why you make sure you contact me first and we do everything in the right order so you don't end up costing yourself a ton of time and money in the long run. So
Right.
contact me first and we can do everything in the right order so that you can buy your favorite house and someone else isn't having barbecues on your deck in the backyard this summer.
Right.
All right. How will someone know what their interest rate will be and what kind of determines that?
It really depends on, obviously, the product. It depends on a couple of things in right now, this situation of current events that's going on. Rates are extremely volatile. And gone are the days of 20 years ago where, if you were in the real estate market, you got a visit from your local loan officer with a paper rate sheet, right? It's like, here's your fixed rates and here's your refinances, and they all were on the paper and essentially across the board meant for all. Now, the rate is determined by a myriad of different things, and it's unique to every transaction. The main factors that are components of how we figure a rate, though, are your sales price versus your loan amount. So that's called the loan to value. The amount of the loan that you need, your credit score, the type of loan, obviously, 30-year, 15-year, but then also, is it based on a primary residence, a second home, or an investment property? Those are all key factors on how we determine that rate. We also do need to understand how long you need that rate, because different contracts have different closing dates. And a lock can only be secured once you have a fully executed contract of sale. At least with Keller Mortgage, that is the case.
Okay.
The reason is that the lock is tied to the property. And we need to ensure that the closing is going to happen by the time that the lock covers the closing period that we have on the contract. that we don't shortfall it. So if you've got a contract that's closing in 60 days, we're certainly not going to lock your interest rate for 30 days and leave you exposed on the backside of things. We need to make sure that the rate covers the closing date.
Okay, very good. And then I forgot to touch on this, but since we're chatting about interest rates and everything, can you kind of explain to everyone what the difference is between a pre-qualification and a pre-approval?
Sure. The easy one-liner is it's documents. So a pre-qualification is what I say a conversation, right? Or just data that has been submitted to your lender so that we can kind of do math and say, if all this is true, you'll be approved. The difference between that and a pre-approval is that on a pre-approval, you supply the evidence about what you stated. So if you said you made $100,000, you're going to give me pay stubs and a W-2 that show you made $100,000. If you say you've got $10,000 in the bank, you will show me a bank statement that shows you have $10,000 in the bank. So that actually goes before the eyes of the underwriter who makes your credit decision from the very get-go. And all of that work is done up front so that then you can securely put in offers, go to contract, and then we're just plugging in a property address, ordering title, appraisal, and sending you on your way to closing.
There you go, handing you the keys.
Yeah.
Okay. Can you explain for everyone what a loan estimate is and then how Keller Mortgage is different from a lot of the other companies?
Sure. So a loan estimate is a legal document, and it is the new, I won't say extremely new right now because it is a few years old, but it replaced what used to be the good faith estimate. And it's an estimate of your closing costs. It is supplied within 3 business days to a borrower who secures a loan application. And what that goes through is an estimate of all of the costs you will incur for the transaction. It will include your lender fees, your title and legal fees, an estimate of what your tax escrows and insurance escrows would be, any balances that are unique to the contract. So if there are prorations or there's seller credits, all of that will be on your loan estimate just to give you a gauge of what you need to do to prepare for closing.
Okay.
Where Keller Mortgage is a little bit different in the loan estimate, I guess you're making reference to fees or lack thereof, right?
Right.
So Keller Mortgage, if you are using the ZeroPlus program, that means that you are dealing with Keller Williams agent on one side of the transaction or the other, so the listing or the buy side. And when you're doing that and using Keller Mortgage, there are no lender fees. So it's not no closing costs, be very clear, it's no lender fees. And what that means is no processing, no underwriting fees, no origination fees. And then in addition to that, if your loan amount is $150,000 or higher, we also will give you $1,000 credit towards your third-party fees. And those are just what I explained, the title or what have you. It's just a simple line item credit at closing.
Wow.
So, I mean, it could be a lot of savings.
Yeah. No, I've definitely experienced that working with you and several of my buyers. They've saved quite a bit of money. So I think it's a fantastic program and just a great deal overall.
Yeah, I mean, it really helps everyone, right? So it helps the folks that really need to focus on saving for the down payment, but it also helps those that have a lot of money that are buying a higher end property because with other lenders, sometimes you're paying an origination fee. An origination fee could be 1% of your loan amount.
Oh, wow.
And, you know, if you're looking at a high end loan, that's thousands of dollars. So
sure. Absolutely.
Potentially.
Okay.
Yeah.
Yeah. Well, that was explained very, very well. So I appreciate you for that.
I say it all day long, so I should know.
Okay. I know you and I have worked on different lengths of contracts. We've closed one less than 30 days, and some of them are 60 plus days. How quick would you say is the average processing for a loan, and how quick can you process one?
Okay. So I will tell you that Keller Mortgage strives for a 21-day loan origination to closing. We, however, right now are in unprecedented times. We are extremely busy in the real estate market as a whole.
Yeah.
And so even though what we're striving for could and probably will be accomplished, we are also at the mercy of third-party vendors. So what that means is, can we get an appraiser out to a property in 21 days? Most likely no. Will a title or an attorney's office be ready to roll out a closing within that time. We're seeing that to be a challenge these days. So
Sure.
I would say, always build in some time. 30 days is healthy right now. If you're a condo and we need to gather condo documents for review, maybe a little longer. So it's really about setting up expectations from the get-go. If we've got a 30-day closing, then we know that all parties have to be in communication from day one about any challenges or hurdles that we need to overcome, anything quirky about the transaction, etc. If we have 60 days, we're not going to let it lie. It's nice to have that back end piece of it where we can breathe, but we want to make sure we get most of the work out of the way so that if there's a surprise or if people want to move up their closing, we certainly could take advantage of that timeline.
Right. Okay. Good to know. Good to know for those trying to get into a vacant property. Maybe the 30-day close would be more beneficial for them. Someone where they're trying to buy a property that's owner occupied and that owner has to find something to move into, maybe a 45 or 60-day close makes more sense.
Right. It's nice to have the flexibility. You as an agent, I know that you use that as a leverage tool when you're making your offer.
Sure. Absolutely. It's definitely one of the top 5 criteria that I reference when I have a listing or I utilize presenting an offer for a buyer. Definitely. Okay. Well, anything else about Keller Mortgage that you think would be important for the audience to know?
Yeah, so Keller Mortgage is, same parent company, Keller Williams, and we are a 100% remote company, actually 98%. So, we've got a corporate office where the executives are in Dublin, Ohio, but we've got our loan officers, our underwriters, processors, closers, all remote. So the great news about that, as it relates to our current situation of COVID, is that we were seamless, and this is the way that we do business. Do we have other challenges because of sheer volume? Of course, like everyone else does, but that piece of it was not. So that said, we don't have brick and mortar. And so that's the reason we can extend the savings to the borrowers, because we don't have those expenses. When we look at that, one of the questions that I get around that savings is, so how does that impact the rate? Are you bumping the rate up to make up for those fees, right? And no, we're not, because we don't have that brick and mortar and the expense around real estate, commercial real estate. So we can pass those savings on to the borrowers. Also, as far as Keller Mortgage is concerned, we are built to service Keller Williams. So we focus on your business, and our number one goal is never to miss a closing date. The single most important thing, coming down from Gary Keller, coming down from our president, Dave Eckert, we don't miss closing dates, and it's just no way around it. So that's I know, very important to you.
That's the best thing I want to hear. Don't miss closing dates. Get people moved in and moved out. Okay. Well, we're getting down to the last few questions. I kind of want to call it like maybe the fire round, I guess. So I'm just going to throw, 2 or 3 questions at you and just, answer it the best you can.
Okay.
How many states are you licensed to do mortgages in?
I am licensed in 13 states.
Wow.
And last week I just got Alaska. It'll be really fun to see those properties. So
that's really cool. Good for you. 13 states. Wow. Okay. For everybody watching.
And the company is 49 states. We are not New York yet. That will happen in the coming probably year. Okay.
Good to know. All right. And then how many loans would you say off the top of your head have you done in your career?
In the thousands. In prepping for this call, I know my goal for this year, and I literally will achieve it in 2 weeks. And I've already put $21 million worth of closed loans on the books, but more importantly for me, I've helped 83 families.
Just this year?
Year to date. Just this year so far.
Oh wow, just 20 numbers.
So putting them in homes or saving them a lot of money in refinances. And I've got right now a pipeline of another 40 some odd. So when you look at that and my career of over 30 amount of years in the business, it's in the thousands for sure.
Okay, well, good to know. Wow, so you pretty much know what you're doing after the first 1,000, I would assume.
Yeah, hopefully.
Okay. And real quick, so how can people get a hold of you? So if you want to answer that, or I can answer that for you.
A couple of different ways. So I would say the first and foremost is through you,
Okay.
because they should be planning if they're purchasing a home, having that initial conversation, and
Sure.
we're talking about the steps, right? So contact Austin first. Talk about what your needs are. He then can identify whether or not that's a fit for Keller Mortgage, because if you're going to purchase a commercial property, probably not, right?
Right.
So that said, reach out to Austin. My contact information, Austin, I don't think you're going to put it on the screen, but an
Yeah.
email, a phone call. We do have a link to the portal that joins both Austin and I when you do make applications, so that we're in immediate communication and on the same page about a borrower and understand where their needs and goals and timing are, so that we're seamless together on that.
Okay. Well, yeah, I will definitely put links down below in the description box for everybody to kind of explore and see what Keller Mortgage is all about. And if you ever want to contact Maryann, just contact me first, or you can contact her through the link I'm going to put down below, like I said. If you're ever thinking about making a move to the Chicagoland area, I'm available by phone, text, email, days, nights, weekends, and I just would love to have a conversation with you. If you ever need a refinance, and I always have friends in different states, I can always have you contact Maryann that way as well. But thanks so much, Maryann, for taking half hour out of your day just to have a chat with me about mortgages and kind of educate people on what's going on out there in the market, and of course Keller Mortgage. And it sounds like you're very, very busy. So from the bottom of my heart, I really appreciate you for taking some time to do that.
It's been a pleasure, and I thank you for your partnership for all of these transactions we've done together. It's great to have a partner that really supports my business when I can support your business too. And the most important thing is to make sure that we handle our clients with the love and care that they deserve, and get them into a home that will be their forever place. So,
Absolutely. I couldn't have said it better. So without any further ado, just thank you, and we'll catch you guys later.
okay. Thank you, everyone.